You're listening to Real Talk Texas on 570 KLIF News and Information. Now, live in studio, your host, local real estate expert Steve Hakes.
Welcome to Real Talk Texas. I'm Steve Hakes, your host, and today we're going to talk about the mortgage industry. We're going to talk about what's happening in that. We're going to talk about some of the new rules that are coming out that are going to affect your lender's ability to give you loans going forward as soon as January of 2014. We're going to dig into that. What's happening and additional things that are coming out from the Dodd-Frank rule that was passed about a year and a half, 2 years ago. So we have a lot to talk about today, and if we get time, I've been promising on the show to talk a little bit about Dana and my experience on the Triumph when we were out there floating around the Gulf a little bit. And so I've had a lot of people calling in and asking for me to share our true experience. So we may have time at the end of the show to do that, and if we do, we will. Again, during the show, if you'd like to contact me, if you got a mortgage question or you want us to look at possibly pre-qualifying you to buy a house or to refinance your home, we're going to offer the service we've been offering for the last few weeks, and it's worked out great. In fact, we've had so much hits on that it's been hard to keep up with it with myself and my staff. But if we haven't gotten back to you, we certainly will. Keep going ahead and texting the show at 817-925-2546. That's 817-925-2546, and we'll get you the mortgage help that you're looking for. First, I'd like to talk today a little bit about what's happening in the FHA market, breaking news on that that's been introduced by Housing Wire. And with that, there was a statement that the FHA may need as much as $943 million in more taxpayer bailout funds in Obama's upcoming budget to cover the projected losses over the next 30 years. Also, the Mortgage Insurance Fund was negative $13.5 billion, according to a 2012 audit of FHA. Now, FHA attributes the remaining financial stress due to loans that were insured in 2009 or before, or under the reverse mortgage product that they introduced. And a reverse mortgage, if you're a senior, it's a very specialized loan. It was offered by FHA. It was kind of a financial planning tool, and most we don't even call mortgages forward mortgages, but that's what they are. You're going to pay going forward. Reverse mortgages really works kind of like an annuity, where you basically get either one lump sum payment for the value of your house, and you're basically giving the house over to the lender that's got the FHA sponsorship there. And so it's kind of like estate planning as well. So you're in the later years of your home, you've got a ton of equity or you have it paid off, and rather go through probate and all those things to get it to your kids, or maybe you need to supplement your retirement, they've had this product out there that's available to help you either get a set annuity monthly payment by living in your house as long as you live there 6 months out of the year, or you can get a lump funding up front. That's also possible as well. So what's happened is there's been recently a real fast change in that. They had a fixed rate for that. And what FHA did in the last 60 days is they have totally eliminated the fixed rate program. Now they are only offering an adjustable rate program to that. And I'm not a reverse mortgage specialist, but we do have one that works at Affiliated Bank, and we can put you in touch with them. They can totally explain that. But what's happened is they've had to get rid of that fixed rate program because it's failed miserably, and it's really caused a huge stress on the FHA insurance pool by people making claims against that. So that's been a huge issue for FHA and that program, and for HUD in general going forward. And in fact, the FHA Commissioner Carol Galante said if we didn't have our reverse mortgage in the portfolio, that they would have a $4 billion surplus by the end of 2013 in FHA. So that gives you an idea of what the reverse mortgage project, it was a good idea. They were really trying to help seniors out, but it's really caused a major, major stress on the funding and the financial position of FHA and that department. So there's something to think about there. HUD Secretary Sean Donovan also projected a $13.6 billion negative in capital reserves. That's what he originally projected, and now he's shrunk that to $943 million due to the FHA's involvement in changing these programs, like we just talked about with reverse mortgage. They've also done things to tighten their guidelines on and to reduce the risk of some of these FHA loans that were out there. You know, FHA, if you're not familiar with where the money comes from, The money comes from when you, as a consumer out there, you're buying Ginnie Mae mortgage-backed securities. And those are unequivocally guaranteed by the federal government. So it's a very safe. A lot of stockbrokers and financial planners will put you in government bonds, and some of those bonds happen to be mortgage-backed securities, and that's where a lot of the money for FHA, VA, USDA type of loans, they're all government-backed, and so that's where some of those funds are going. To update you on the other side, there's really two types of government type of loans now. Fannie Mae and Freddie Mac, they're not government agencies, but they're government-sponsored entities. So what they're called a GSE, government-sponsored entity, which gives them a little favorable position. It keeps that liquidity of mortgage money available to you out there so that if something bad happens in the economy and banks shut down, you've still got ability to get funds from a government-sponsored entity and keeps that mortgage and housing market going forward. Actually, Fannie Mae, for the first time in a long time, it was in the black. And so they're predicting remarkable growth based on the sales of single-family homes this year, growing at 15.1% nationally. And in 2014, listen to this, 2014, they're expecting the economy to come back, and they're predicting a 44.1% growth in housing sales in 2014. As a mortgage guy here, I got to smile to that because that means more business for us. For our consumers out there, it seems like, okay, well, maybe the jobs will come back. We'll touch a little bit more on that after the break, but if you want some advice on your mortgage needs, please get out your cell phone, send a text to 817-925-2546. That's 817-925-2546 for sound advice from us here at Real Talk Texas. We're going to help you out with your mortgage today. Stay tuned. We've got a lot to talk about. We're going to talk more about Fannie Mae. We're going to talk about the Dodd-Frank qualified mortgage rule that's coming out. And that's going to cause some major changes in the products that are available to you as a consumer. And it may even put some pressure on you to go ahead and buy that house in 2013. So stay tuned. You're listening to KLIF AM 570. This is the Real Talk Texas show.